Hello traders, it's Graham here from Kilted Trading again. I'm very excited to introduce to you guys the Kilted Trend Pilot. This is something I've been working on probably for the best part of 2 years, refining, updating to get it to the point it is today. So I'm very excited to show you guys. Now, the good thing about this strategy is, I guess, more the sort of longer term strategy. You're generally looking at the daily time frame, which a lot of traders now are sort of focusing on. It's just much easier to see the various trends, etc. And this particular indicator is good across any instrument. I've certainly used it on stocks and Forex. Predominantly on Forex, but I have to admit the biggest trade I took last year as part of my self-managed super fund was using this strategy, and it paid off dividends. So I'll start by just taking you through the strategy. It's a lot simpler than the Kilted Strength Meter in terms of trying to explain how it works. It pretty much tells you exactly what to do, but what we have done is actually coupled it here with the Kilted Strength Meter, as you can see down the bottom, and both together provide an excellent way of trading, primarily because the Kilted Trend Pilot is a trend following system. So you certainly generally don't want to be trading the trend when the market's going sideways. So I'd like to introduce you guys to the indicator, take you through some random setups. I'm just going to pick some stocks, and I'm going to pick some Forex pairs, currency pairs that we can actually have a look at. So I haven't, and I will be honest here, I haven't looked at any particular setups except this one. This one was the trade I took late last year, which is a particularly good example of a good setup on the system, and a really good one to show you guys when it's good to get out of a trade. It certainly saved me a lot of grief. So let's take you through it. So admittedly, when I took this trade, I was looking at the macroeconomics of this particular stock. It's actually an ETF fund. So for those who don't know what an ETF is, it's basically an exchange traded fund, which basically means they buy a lot of different stocks but in the same sector. So they're effectively trading a basket of stocks in a particular area. In this case, it was a construction sort of based fund in terms of building stocks. So with that, I had a look at sort of interest rates and thought, well, good time to be building infrastructure. It's an infrastructure based fund, another way of terming the type of ETF funds. But when interest rates are cheap, it's generally, and the economy is doing well, which it was at that point in time, it's generally a good time to look at infrastructure funds, especially when borrowing is cheap. So that's exactly what I did. So I used the indicator to help me get a position. It was an interesting time because my financial advisor, once I had actually picked a stock, because I actually picked this one myself, because it was my super fund, self-managed super fund. I said, look, we were sort of up here, and I said, no, it's going to pull back. I don't want to get in yet. It's too expensive. So we got in round about the 320 mark, which is, you can see some signals here on the indicator. More interestingly, down here, it was sort of moving a bit sideways. I wasn't using this indicator at the time, so you can see it was going up. So in line with our sort of kilted trading methodology, we've got blue for up and red for down. So everything's really, really simple here, guys. So you've got the buys in blue as well, sells in red. The small dots are basically when you have a change of trend in the smaller line here, which is our sort of fast moving moving average here, which is all built into the indicator, and the larger are the slower moving average is this larger line here. So that's when we have a change of trend of the larger lines, and that's the yellow dot, which is more significant. That's the reason why the dot's larger. It's a more significant change in the trend, and you certainly want to be looking to get out of a position if you hit that level, if it's trading against your particular direction. So in this one we got in at 320. We rode it up quite nicely. Obviously we had a little bit of whipsawing here, but it's come up, come back to retest, and then it's marched on, right? Then it's got a real kick on, and it, by all accounts, it was doing very well. That was up in January. That's where it really kicked off, and I was monitoring it sort of every other day, so weekly, just keeping an eye on it. And then we get up to the interesting point here, which is where I want to show you guys now. This is when the economy started to show signs of distress, when we had the virus sort of starting to hit. You can see the date there, 20th of February. Now, what I did was, it was actually on a Sunday. Remember the date specifically, it was on a Sunday, and the markets were having a little bit of the jitters in terms of the news of the virus. And basically what I did was I basically put on a stop loss myself on the Sunday to make sure that I protected the trade, because you can see we have a strong move up here. As I say, I wasn't using this necessarily down here. I was just using pure price action on this one, and I had my stop loss somewhere sort of around here. I think it was 340, so it was a trailing stop. You saw the video over the weekend. I like to set sort of trailing stops when I get to a certain point, and lo and behold, the market came down so hard that I got out at 336. Now that was a really good move, right? It was a good trade. It's one of the better trades I've actually had. It was a fantastic trade. I won't tell you how much I put on that. I was in myself, man, super fun, but it was let's say there was tens of thousands of dollars on the line on that one, and that's a lesson learned for you guys who rely on your super fund making the right decisions, getting you the 6% a year. That sort of 6% was moved. We achieved that within a matter of 2 or 3 months. But anyway, that's by the by. We did get stopped out at 336, but look at that move down, guys. If you want to learn a lesson, a very hard lesson, if you're going to put on a stock and you don't put on a stop loss, look at that thing fall. Oh my goodness, it's changed trend and then it's kept going. So we got in at $3.20 back here, and it is now, it went as low as, and I haven't really been interested in getting back into it yet, but it's went as low as $2.29, believe it or not, and then we've had a rally up, but you can see that it's starting to turn over again now, so don't really have much interest in this one at the moment. So you can see here a couple of things. I've actually set this up on a daily chart. What's quite nice in trading view is you can set on the same stock on a different time frame. So it's all about the big picture, guys. So you can see the daily here, and you've got a 4-hour chart on the side. So you can split the screen up into two here. So you can select your layouts. I was speaking to one of our subscribers the other day, conversing with them in terms of how really good this is, where you can set how many different panes you want of. You can even have different stocks. So I could have MICH here, and I could have, say, Qantas over here, and I can have a look at both these stocks. Or I can have my favorite stocks. Maybe I've got 8 stocks that I monitor, and that's it. I can put them all on the one window here. So yeah, that's really nice. One thing I particularly like, especially when you're taking an entry on the lower time frame, is you've got this crosshair here. If you check that, then you basically see on both charts. We'll just get rid of that for a second. You can see where the line is on both charts. So if we come over here, we'll show that a bit better. What we can see is if we have a bar here or here, you can actually see that represented on the daily where it is and on the actual 4-hour chart as well. So that's a pretty cool feature. So I really probably should do a live session where you guys could actually shout out pairs. That would be quite good. But let's have a look. What we're going to have a look at next. I just thought I'd bring up that trade to show you. Let's have a look. Doesn't really matter, we can pick anything. Let's have a look at Facebook. Let's see where we're going here. So the tech stocks have been rallying fairly well of late. Let's see if we've got any signals here on this one that we can actually have a look at. Let's go, I might need to go back a little bit on this one. So here we've got a sell here. So this is a really good example of when it gives a false positive, I guess. So here we have a sell signal, and this is where its strength comes in with the Kilted Strength Meter, if you like. So there's certain things. This is very slow, so bear with me, guys. So we've got here a sell signal, but one thing we have to bear in mind is we don't really want to be getting into a trade if the market's sort of moving sideways. So at the time of when this was actually triggered, the sell signal, you can see here our thick white line was actually below our sort of trigger point for a trend or being in a trend. So, you know, that was a clear indication that you probably wouldn't want to take that trade because it's going against our rules. We really only want to be taking a long or a short on a trading system if we're not moving sideways. So that's an example where you want to pair the two up. Let's see if we get any other signals. This one is a buy. So here we have, so the R stands for a re-entry. So what we're looking for, the premium setups are actually where you have a Kilted by A+. So that's the premium setup, and that's where the blue, the long-term blue line is matching up with a blue line on the shorter sort of moving average here. So in this case, we've actually got a re-entry which triggered sort of here, and then you look down and you say, well, yeah, we're actually sort of coming back down off a downturn, but we're turning around, and we've got the blue crossing the red, so we've actually got an uptick here. We're still above sort of trend line here. So would we have taken that trade? Yes, we probably would. The decision would have been, where do we get in? So if we'd taken in, you know, a long at the break of this candle after it's actually formed, then that would be a good entry point. And you can see here, remember guys, this is on the daily chart. So if we just draw a line here, we'd have got in here, and we would have got out here with the yellow dot. Okay, so you guys might want to trade this a little bit differently. It's up to, you know, the rules that you set for yourselves on this one. The general rules are, I've got a Kilted exit, that's another indicator I'm actually working on at the minute, but the rules are generally when the price action change from being sort of bullish to bearish, which is the signal here, that's a small yellow dot, you really want to be getting out of the trade. But you can see the run up there, that's gone from, let's see the price, roughly we'll say $1.90 say, and it's ridden it up to $14, so it's gone up to $204.70, and that's when you've got out. So in confluence there with the Kilted Strength Meter again, when you see here we've got a further cross indicating strength in a trend, and where is it? It's to the upside. So at this point you would be saying, okay, I still want to be in this trade, because by all indications we're actually still moving up. So it just gives you a little bit further confidence that you're in the right trade and letting your trades run, so to speak. So let your winners run. So that's a good example on Facebook on the daily chart. Now guys, you can have a look at the charts on this. If you go back to 18th of June 2019, you can go back to the same point in time and look at the trade. I'm not making this up. This is live on TradingView in terms of looking at the actual charts and going back and looking at setups. So let's look at, and this is all stocks, let's look at another stock that people are sort of familiar with. It might be on this list. Okay, Visa actually had some trades on this last year, so let's see what it's doing currently. So right, let's actually have a look at the most current price action. So nothing really of note there. You can see we're up and down and we're sort of chopping around here, which we can see here. We're chopping back up. We've had I guess a fairly strong move to the downside, but very choppy. So let's see if we can move back a little bit and see if we've got anything. It looks as if we've got a buy set up here, which we do. However, very tight spread there in terms of the price action. That's very constricted. We're sort of moving sideways, and you can see that with the Kilted Strength Meter here, and then we've ticked up. So some of the ways you can play this is you can say, okay, I've got a buy signal twice, but we're still moving sideways. Is it going to break? Is it going to break? When it does, I want to be interested. So you can see here our Kilted Strength Meter has triggered a buy. If we look back to the left, did we have a buy trigger here? Yes, we did. So we've gone up. That would have been a quite nice setup. Let's see if we get any better ones. Actually, we can show you. So here's a good one here. So here's a premium setup, guys. This is the one you want to be interested in. This is a Kilted by A+ setup. Now the A+ setup, as I mentioned before, is when you've got a change of trend. So you've got one trend that's exhausted, getting bored, and then we're swinging to a different, market's taking us in a different direction effectively. So here we indicate that with a Kilted A+. So we've got, now we don't paint this until we get it matched with this trend on the shorter moving average. So you can see here, we'll just try and zoom in a little bit on this one. In fact, we'll one of the things you can actually do is zoom in a bit more. Let's see if we can have a look at this one. So it's painted here, so you'd have probably you might have used a pin bar as your entry, you might have used an inside bar as your entry. Incidentally, we have that all coded in for you guys. So here you can show pin bars, you can show inside bars, we can show swing highs, we can show swing lows. That is all built into the indicator. Now a lot of people, and I mentioned that on one of the forums, where it's like, oh, I just want it, give me it now, because all I trade is pin bars, and all I want to see is swing highs and swing lows, and I have a trouble sometimes defining those. So if we just put on swing highs and swing lows for now, because it gets a little bit messy otherwise. We can have a look at this one. Because we're swing trading, you'd probably want to put your sort of stop loss below the last swing low. So you could actually, see how tight your stop is here, you could actually put your stop loss here. So you've been at 137.91. It's triggered here, so you might have taken it off one of these pin bars, for example, maybe this one, for example, your entry, and then basically you're looking for your time to get out. Now, again, like everything else, there's different ways, and it's all about trading your way and how you like to trade the markets. You could take a quick profit off the table, which is, you know, our small yellow dot here, but that's just a small retracement, guys. You can see that's a small retracement. Notice here though, we are below the we are sort of moving sideways, indicated by here, but we are starting to move back up. Okay, so would I have taken this trade? Yes, I probably would have at that time. Basically, on the fundamentals here, I mean, you've got still the blue above the red, so that's in your favor. You've got the market moving sideways, but you are moving up towards getting a trend on, and this is why it's, you know, indicated as a premium setup, because you're sort of getting in early with the new trend. And sometimes you do get a bit of I guess a pull back and then go. That's just something to be aware of. That's why you probably want to trade it off something like a pin bar. So if you get a retracement, then you're only going to be in on the break of that pin bar. Again, you can switch that on in your settings if you want to see those. But for the illustration purposes, you know, you could have ridden this trade right up to the change of a trend. So you could have taken this move, let's see, from our entry point, which we said I think was 139 or something. So let's call it 143.20. You could have taken this trade right up until, this is very slow, so 142. You would have kept in the trade. The trend is still up, and you would have gotten out at this dot here, a large dot here, so that would have went up to 182. So that is a big move, guys. Admittedly, that's over a fairly long length of time. So that's September 2019 from an initial entry, which was around February. So what's that? Sort of 7 months. Not a bad trade-off there though, guys, in terms of where you get in and where you get off, and it's telling you to get off. That's the thing I like about this one. It's very simple, rules-based, guys. It's telling you where to get off if you want to take some quick wins. Remember, it is a trend-based system, so you're trading the, you know, you're looking to take the phase ones, which is this, and then take profit. You're looking for then your next phase one, which is your kilted buy re-entry option. So you got a second chance. So even if you miss this one down here, you can re-enter back here, or in the next option, available spot, and then you can, you know, take some good wins on the way. So multiple ways to play it, guys. Depends how much you like or how long you like your trades open. So there's a few sort of random stocks. Let's go to some random currency pairs. Let's see, AUD, USD. I haven't actually had too much of a look at that today, but I did see some of the prediction over the weekend that it was going to fall. So let's actually see what it's doing at the moment. So that was a while ago. I've obviously been looking at a channel, which was back here. So that was the last time I was looking at this one. Do we have any setups? Well, we did have a sell setup. Was that a good trade? Would I have taken that one? Absolutely, I would have taken that one. Let's see here. So we've got our kilted. Actually, I'd have taken both, to be honest. So we've got our premium setup here. Look at this. This is great confluence here. That just gives you the confidence to get into that trade, guys. And look at that, we've got a premium setup, we've got our Kilted Strength Meter saying we've got something on the go. We have sellers rushing in with the big red dot. We're basically all red. There's not a clear signal there. And look at how nicely that one is played out. Okay, so let's actually measure that one. So we triggered here. So let's say we got in, you know, conservatively we got in maybe here. And then we would have gotten, well, you could have gotten out here with the change of sort of trend. Now that's a decent 44 pips. But then you could have kept going. Yeah, again, you could have got out here if you're uncomfortable. So you could have got out at, what we're saying here, we're saying, talking say, let's call that 100 pips. If you'd ridden that right down to here where we've got another sort of yellow dot, because you can see here it's going to paste a yellow dot or flag a yellow dot where you've got that change of trend on the smaller time frame. So it's, I mean, ideally if you're monitoring your charts, you'd have probably got out here and right at that change, which is where the dot is flagging. So you can see how accurate that is, right? You might have a slight retracement up and given back a little bit, but guys, that is 716 pips of a move. Now for those of you trading Forex, you know how big a move that is, right? That is a very, very nice move. So you can see there, it's all about being patient, guys. It's all about following the strategy, following the rules, matching the reds, matching the blues. Keep it really simple. So let's have a look at another pair. Actually, look. Let's have a look at. I don't actually trend exotics. Too much risk on the table in terms of swap. But let's have a look at the Turkish lira, because as we all know, I think it's TRY. I got that right. I would if I was on Forex. Turkish lira. That's the one we're after. Now this thing will be whip swine like you would not believe. Now it's interesting, their currency went haywire as we know. So let's have a look at what it's doing of late. So we can see a lot of blue there. So US dollar, no surprise, very strong. So here we have our A+ setup. Now here's a good example of where sometimes you get your A+ setup, right? We've got a change of direction and then you've got your sort of buy signal here, but then you have the retracement, right? Sometimes the market just goes woof, off it goes, right? And it doesn't look back. Sometimes it retraces and then goes. So that's why it's important to put, when you're putting on your trade, you either want to trade something off like a pin bar or something. You might actually maybe triggered in here, in which case the trade wouldn't have actually triggered in here. It might not have triggered at all. You might actually like to get in on a re-entry point here, which is fine, because 9 times out of 10 you will get that retracement. But that's all important for where you place your stop as well, because you can see there it's retraced. So even if you got in maybe at the wrong spot, because you've got your stop loss under the last swing low, there's every chance that you're not going to get stopped out. It's going to retrace and then go, okay, which is the case here. Now we do have confluence on this one where there is the strong push to the upside, and then obviously it's retraced, it's come back down, and then we've sort of moved sideways and I've got in the retracement, which typically happens. I'll take a bit of a rest. It's had this big push up, the bears have pushed down, then it's have a bit of a rest, and then bang, off it goes. And that's then you've got the confluence after you've taken your trade, say here on the re-entry. Yeah, you might have got on here, let's say. Then you've got your confirmation setting up here to say, yep, you're off to the races, you're on the uptrend. You've got the buyers rushing in, the big blue dot, and then off she goes. So if we look at this one, even if you got in at the wrong spot, guys, let's have a look at this. if you got in at the wrong spot, and let's say you're trading the yellow dot to the yellow dot, let's say, if we got in, say, at the worst possible point, which might have been there, you'd have your stop loss down here. Admittedly, that is a fairly wide stop, so you'd need to manage your risk management there, guys. You'd be wanting to manage your lot size to take on that amount of risk, because your stop would be going somewhere around here. Protective stop would be down here somewhere, would be there. Now if we have a look at where this one played out, the first large dot hasn't actually appeared yet, so you'd still be in this trade effectively, and that's something that's when would that trigger? That was when? So that was November last year. We're on the daily here, so admittedly you've been a long time in this trade, but again, let's measure where you'd be. So you've got in here and you're still in the trade, so let's say you are up around here. Let's move this across so we can see what we're doing. So let's measure that again. So we get in here, maybe not the best position, but we've traded our plan and we're still not stopped out. So, and that is 11,302 pips on that one. So that's a huge move, absolutely huge move. So that's a good one. And then you obviously got these re-entry buys here. That would have been a good re-entry there actually, because we're in, we're trending, we've got the blue above the red, we're going up. I'd be quite confident to go back in again. So it's all about stacking the probabilities in your favor. Let's have a look at one of my favorite trading pairs, which I actually have a position on at the moment, which is, let's see how that's actually doing. Oh, I can't shut that down. But what is this showing us here? So I took this trade earlier, which was a Kilted trade for the sell. It was an A plus on the 4 hour. So we've got basically coming off the downtrend, we've got a move to the upside. I like this, particularly on the 1 hour, because it's showing a bit of a double top. Again, we've got nothing really presenting on the daily, but you can see here on the daily, again guys, it's all about the big picture. So I've come up to test this moving average, this long-term moving average, and I've seen here that we've had the train tracks here where we've gone up and we've gone straight back down, and then we're sort of down again. I'm trading this play here as being this sort of double top and strong resistance through here, off the back of this downtrend as well. I'm not going to draw that, it's going to get really messy, but you can see the idea here. We've got this strong move down, we've tried to move up, but it hasn't quite done it. We've got a bit of a false break here with the train tracks, and then I've looked to the lower time frame to get my entry. I do that quite a bit to get a good entry, so I'm actually up quite a bit here, looking for a monster trade, hopefully out of this one, but I'm certainly in short on this one at the moment. With confluence on my Kilted Strength Meter, I've got the tick of the red above the blue. Certainly gives me a bit of confidence to take that trade, and we can see it's been moving down. Bit of indecision here. We've got the bearish pin bar. I think that's pretty much where I went short, and we've had this move down, retracing slightly, but so far so good. So guys, that is the Kilted Trend Pilot. I know I haven't spent probably as much as I spent with the Kilted Strength Meter, basically because it's a lot simpler. It's a lot visually easier to understand. It's basically matching up the blue with the red. You don't have to think about it too much, and it's giving you Are you going short? Are you going long? It's actually telling you. The only thing that you really need to have a look at, and I would recommend it with any trend-based system, have a look at something like the Kilted Strength Meter. I'm not saying you have to buy this one. I'm just saying use something that's going to identify whether you're moving sideways or not. Certainly this is a fantastic job of doing that for me, and I use it quite a bit. I mean, guys, look at that move there. I mean, that's one mother of a move to the downside. Very nice move. So that's it for the Kilted Strength, the Kilted Strength Meter, coupled with our new Kilted Trend Pilot. I am going through the motions of submitting that through TradingView. They actually have a moderation system where basically they do a QA of your code, a bit like when you submit an application to the Apple Store, which I absolutely love. I think it's great. So it cuts out all the charlatans out there with below par scripts, let's say. So I go through a fairly strict process for that. So I haven't made the actual system available quite yet, but I'm pretty much on the sidelines, ready to make this one available to you guys. It's been one of my favorite systems over the last 2 years. I actually learned the strategy off a very successful hedge fund, who I still actually trade with, looking to trade their capital should I be successful in their qualification system, which is very lengthy, very rigid, but for good reason. You're trading someone else's money, and a lot of that too. So still on the qualification path there, but I'm pleased to see I'm on the gold level, which is good. Not much left to say about this one. I'll just open up the settings again so you can see you can trade pin bars, inside bars. Actually, let's have a look at those before we close this one out. So the nice thing here is I'm only going to show you short inside bars or long inside bars based on some rules that I've actually built into the system. So I'm actually only going to show you inside bars, i.e. when you want to go short, if you're below the long-term moving average. Okay, so that's a really nice thing that I've built into the system to keep you on the safe side of the market. You definitely don't want to be looking at going long if your long-term trend is actually to the downside. You can, of course, but I wouldn't recommend it, because then you'd be trading against the trend, the stronger trend, and catching the falling knife, as they say. And similar for if we have an uptrend, it's only going to show you inside bars where you're actually on on the upside or the right side of the long-term moving average. So you can see here we have an inside bar being this red bar. The parent bar is a blue bar, so it's going to only paint you a long inside bar if you are above the long-term moving average here, to keep you on the right side of the market. As you see there, it wouldn't have actually triggered, so that's a good thing. So thanks for listening, guys. When you do get your hold of the Kilted Trend Pilot, I encourage you to use it, test it on different markets, have a look at it on the different time frames. It's designed specifically on the daily time frame, but it can be traded on any time frame. As I say, I trade it on the 4-hour, which I take for entry positions. I find it to be very successful on the daily, even the monthly. And there's a lot of people that trade on the monthly charts. They don't have a whole lot of time, so like to trade the monthly. It gives them clearer signals. It's up to you guys what time frame you trade, and that comes back to what style of trader you are. So thanks for listening, guys. I hope you have good success with the trading system here, the Kilted Trend Pilot. If you decide to purchase this indicator, it hasn't certainly disappointed myself. You're going to have losing trades. That's again part of the system. We always have some losing trades. I've showed you some that are losers in terms of when it's triggering a buy or a sell. We looked at one earlier where it triggered, I think it was a buy, And we can use the Kilted Strength Meter for confluence to avoid some of these poor signals, so that you have more winning trades and losing trades, and your win ratio becomes much better. With that becomes, you require a little bit more patience to wait for the right setup to appear, but generally when the right setup appears with this indicator, it usually pays really good dividends. So stick with it, guys. Remember, don't trust me on this. Have a look if you decide to purchase the indicator, back test it, get on a demo account, see how it performs. Don't take my word for it before putting your hard-earned money into the market. Test it out, back test it, and you'll be in a much better position. I also give a sort of PDF sort of a cheat sheet guide in terms of how you can use the indicator, along with all the alerts. There's a number of alerts that's coded in straight off the box, out the box rather. If we have a quick look at those, we have, if we choose Kilted Trend Pilot, and then you've got you can basically, so this is like your own. Someone said to me, why don't you set up like trading signals? That'd be the way to go. You can get more money out of that. I'm not really interested in that, guys. I would rather teach you guys how to actually trade properly, stick to a system. This gives you your signals. You don't need a signal service. If you've got a good system and you can set up alerts, this is going to give you the signals. You purchase the indicator once, you have it for life. It gives you the signals. Okay, you get all the updates for free if you purchase the indicator. That'll signal if there's a long entry. And say, for example, you're only interested in the premium setups. That's a long or a short. That'll set up the alerts. When you want to get out, that might be when the long HMA Hull moving average has actually changed color, which is the type of moving average we're using here. Or if you're looking for more the short term, like what you term maybe scalps, you might want to get out when the short HMA has actually changed color. So that's your yellow dots, right? And then you've got, if you miss what looks like, you've seen that there's an A+ setup, maybe you want to get an alert when there's another re-entry opportunity. That's what these indicators, these alerts are actually all coded in straight out the box. So that is your own personal butler signal service, if you like, that you can set up on the pairs that you want, and on the frequency you want. You might want to set these up on a daily, on a monthly. You might be interested in a lower time frame. Not that I've used that much, but the system should work no differently on the lower time frame. I wouldn't go too low, guys. I wouldn't be going any lower than probably half an hour on this one. Certainly I trade it mainly off the daily. So okay, we'll call it a wrap at that. That was just to give you guys I guess a sneak peek at the Kilted Trend Pilot, which hopefully will be shortly available for you guys to use in your own trading system. I do recommend that you use the Kilted Strength Meter or something similar if you've got a better system or a better indicator that gives you an indication of whether the market is moving sideways or in a trend. By all means use it, but I would certainly recommend any trend following system to couple it with something that's going to give you a clear visual of whether the market is moving sideways or in a trend, because you certainly don't really want to be taking trades that are being flagged when you're actually moving sideways. So for now, take care, look after your families. As I always say, stay strong. We're still in lockdown here in Australia in sort of level 3. New Zealand's sort of scaled back down to where we are now, sort of level 3. Hopefully things start to get back to normal for everyone around the world. And thanks for listening, guys, and speak soon. Thank you.